Welcome, everyone. Today, we are diving headfirst into the absolutely fascinating world of foreign exchange. We're going to break down how currencies are traded, and we'll even look at some of the powerful forces, like commodities, that can change their value in the blink of an eye. I mean, have you ever really thought about it? It's at the very heart of our global economy. It's the reason the cost of your vacation can change overnight, or why that imported car you're dreaming about has a certain price tag. So, how does it all actually work behind the scenes? So here's the game plan for this explainer. We're going to start with the marketplace itself. Then we'll meet the key players, the currencies. After that, we'll get into the most important part, currency pairs. Then we'll add a really interesting layer with commodities, and we'll wrap it all up with the key takeaways you need to know. Okay, first things first, let's set the stage. And I want you to understand, we're not talking about just any market here. We are talking about the single biggest, most massive financial marketplace on the entire planet. This is the foreign exchange market, or as most people call it, Forex. You know, it's not in one building. It's this huge global digital network. And get this, we're talking over $6 trillion swapping hands every single day. It literally never sleeps, just humming along 24/5 as the world's financial centers open and close. So in this gigantic market, what's actually being bought and sold? Well, let's get down to the absolute basics, the fundamental building blocks of it all, the currencies themselves. It's actually pretty simple. A currency is just the official money of a country. A cool way to think about it is that each currency is kind of like a share in that country's economy. So when you're holding a US dollar, you're basically holding a tiny piece of the American economic story. And here are the heavyweights, the big players in the game. The US dollar, the USD, is the undisputed king of the hill. It's the world's main reserve currency. But you've also got huge players like the euro, the Japanese yen, and the British pound. Oh, and pay close attention to the Australian and Canadian dollars. They're going to be really important in a few minutes. All right, you're going to want to lean in for this part. We're about to hit the single most important concept in all of Forex trading. Seriously, if you get this next bit, you've pretty much unlocked the secret to the entire system. This is the real heart of it all. So let's just ask a simple question. Let's say you want to trade the US dollar. How would you do it? It's not like you can just walk into the market and say, hey, I'd like $1, please. It doesn't work that way. So, what's the secret? And here it is, the big aha moment. You never trade a currency by itself, ever. That is the golden rule of Forex. Every single transaction you make involves buying one currency and selling another one at the exact same time. They always move in pairs. A currency pair is basically putting two economies against each other in a head-to-head matchup. The price of that pair tells you the relative strength of one versus the other. Now, the trick is to stop thinking of them as two separate things and start thinking of the pair itself, like EUR/USD, as one single thing that you can buy or sell. Okay, here's the most crucial part. How to actually read one of these things. It's easy. The first currency you see, the one on the left, that's the base currency. Just think of it as the product. It's the thing you're actually buying or selling. The second currency on the right, that's the quote currency. Think of that as the price tag. It tells you how much it costs to buy one unit of the product. Let's use a real-world example to make this crystal clear. Say you see this, EUR/USD equals 1.10. What on earth does that mean? Well, our product, the base, is the euro, and our price tag, the quote, is the US dollar. So it simply means that €1 is going to cost you $1.10. See? Simple as that. Okay, great. We've got currencies, we get how pairs work, but guess what? The story doesn't stop there. The value of these currencies isn't just decided in some financial bubble. Let's add another huge piece to this puzzle, commodities. I want you to think about countries like Canada, or Australia, or New Zealand. A huge chunk of their national income, their economic health, comes from selling natural resources. You know, digging stuff out of the ground or growing it. We're talking about things like oil, gold, iron ore. That's what commodities are. And this brings us to this really cool special category called commodity pairs. Basically, these are just currency pairs where one of the currencies comes from a country that's a major commodity exporter. And because of that, the value of their money can be super sensitive to the global price of whatever they're selling. Just look at this table. It makes the connection so clear. When the global price of crude oil goes up, what happens? Well, it's often fantastic news for the Canadian dollar, the CAD. Why? Because Canada sells a ton of oil. It's the same story for Australia. When gold or iron ore prices are booming, the Australian dollar, or AUD, tends to get stronger. It's this powerful economic link that you can literally watch play out in the markets every single day. Whew, okay, we've covered a ton of ground here, right? From the mind-boggling size of the Forex market to that intricate dance between commodities and currencies. So let's just pause and boil this all down to the key things you absolutely need to remember. So if you walk away remembering just 4 things, make it these. Number 1, Forex is the biggest market on Earth, period. Number 2, you always trade currencies in pairs. That's the golden rule. Number 3, the first currency is the product, the second is the price tag. And number 4, for some resource-rich countries, commodity prices are a huge driver of their currency's value. So we've put all the building blocks in place, but really, this is just the beginning. The value of these pairs is shifting up and down constantly, so the question I'll leave you with is this. Beyond commodities, what other massive forces, things like interest rates, big political news, economic reports, are out there causing all these values to change every single moment of the day? Something to think about. Thanks so much for joining me.